Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, February 24th, 2023. So, I just finished doing the premium video for the folks in the gold room, and we wanted to keep it simple this week because I think in a lot of ways it is. Doesn't mean that the direction is clear, but the plan is simple. And I'm going to cover 3 levels today with you, so feel free to mark these up on your charts, jot them down, whatever you like. And that's basically going to be my plan going into next week. So, last week's video is called Clear as Mud. We're starting to get a couple of sell signals. This was the Friday candle. But everything on Friday of last week closed right at support. It still had above this support. It was above the 21, which is the green line here. And it relatively held structure, but it didn't have the right momentum profile from the inside out, meaning it didn't look right on the hourly chart. It was giving a lot of sell signals on the hourly chart. This week we get a sell-off candle, right? So the internal momentum of the market based on the 1 hour chart has played out to some degree. But I think the question that we have to answer this week is, well, as always, what's next? What do we do from here? So this week, I would say, is actually pretty clear in terms of developing a plan. So this is a SPY. We'll focus here. I'm going to show you 3 tickers today. It's going to be the SPY. It's going to be HYG, which is junk bonds, which is an excellent proxy for risk taking or risk avoidance. And lastly, I'm going to show you the dollar, and we'll come up with a plan for all 3. So with SPY here, you did close right above the daily 200 there, which is the red line, but you closed below the 50, and you closed below the VWAP for the year, which is the dashed white line, and you closed below the 21, and you closed below the VWAP from last year, which is the dashed magenta line. So in terms of support levels, all of this from a trend perspective was support, right? Your moving averages in trend should act like trend and be support. When you see them break, essentially that's telling you, well, maybe you don't actually have a trend here. Maybe, or maybe even worse, if you're bullish, you're getting a reversal to the downside. So the level here on SPY is 393. Right, it's basically the 200 daily simple moving average. Very big level, institutional level. Even if you just read page 1 of Trading 101, you know about the daily 200. So major line in the sand, and the reason that level is so important here, the 393 level, is below that you don't have any moving averages, right? At the moment, they're almost all on top of price, which is bearish. And if you get below that 393 level, well, at that point, then the only thing that you're left with is structural support, not trend support. So what's the difference? Trend support is the moving averages. Structural support is previous highs and lows. So as you can see here, if we go to the weekly chart here on the left, if you break any further, and you can use the weekly 21 or the daily 200, they're interchangeable at this moment in time. If you break any further, the next support is structural support, and that doesn't come in until about 375, which are these previous wick lows. And if we start here, and our support is until there, right, from S to S essentially, you see there's just open space. So any further breaks here of 393, I think, will result in a very quick flush to about 380 to about 375, which would be a generous drop from here. And the signals are pointing that that's the direction the market wants to go. If you look at the squeeze histogram, you do have negative momentum squeeze to the downside. Your trend oscillator has crossed bearishly right here, which it had been bearish for over a year. It went positive all through here, and now it's back to bearish. And then to top it off, you do now have a high-low sell signal here, right? Which is going to be a problem when your momentum looks like this to start with. So if we look at this as kind of the trifecta of signals, these are all now sell signals. So it's going to be a very heavy task here to get the bulls to be able to hold here. I doubt they let this level go without a major fight, because the bulls know this very clearly, that 393 is their last support level, and if they lose it, well, they're going to lose much, much bigger things going forward. So they have to fight and claw for that 393. So given the position of the SPY here, from myself, any bounces back to the hourly 50 or the anchored VWAP for the year, which is 400 and a half, are going to be short opportunities. I do want to wait for a bounce before I initiate a short, but basically everything here would imply short the bounce. So the first level here, I just wanted to cover SPY a little bit more in depth, just so you can understand kind of the momentum structures here, and kind of the degradation of the momentum structures from the inside out, and how that happens first, and then it shows up on the daily charts, right? Because if last week on Friday you were like, well, we closed above the daily 21, that's bullish. Well, no longer, right? So first level, SPY 393. You have to get a daily close below there to invalidate it. Next up is going to be HYG. This is the junk bonds. And you're going to notice that this looks significantly more bearish right off the bat than the SPY, which is going to be a bearish signal overall for markets until the HYG here starts to firm up. And I'll give you the specific level here in just a second. Until this starts to firm up, again, most signals would imply that the market's going to be a short here. So I'm not going to cover all of the various momentum signals here. I don't think there's really a need. You are bearish here, and you now have a mid-level sell, which are the worst kind of signals if you're bullish, because those tend to be the most powerful signals to the downside. So this is a pretty overwhelmingly bearish chart based on the structure, whether you look at it on the weekly or the daily. And the level that you need to get above on HYG in order to restabilize the market is going to be 75. So below 75, I cannot look at the SPY as a long for longer than a day trade. If you're trading the hourly chart, you're just day trading, long or short, doesn't matter. If you're going to hold the trade 3 days or longer, which is now a long-term investment in this market, then you need to see HYG be above 75 so that you don't have wind at your face if you are a bull. So the second level I'm going to give you, 75 on HYG. If you're bearish, stay bearish below 75. If you're bullish, you can't really justify bullishness until it gets back above 75. And then lastly is going to be the dollar. So the dollar here, what you don't want to see basically, what's kind of the worst combination if you're bullish, or the best combination if you're bearish, is going to be dollar strength, so Dixie going up and HYG going down. If you tell me these two things, I can tell you almost with a high degree of confidence what the SPY is doing. So the third level here is going to be Dixie, and it's going to be 105 on the Dixie. And so basically the Dixie needs to get back below this breakout level here, right, which is basically going to be 105. If the Dixie gets any more steam, and it certainly doesn't look like it's going to slow down here. It had ample opportunity to break. If you just use a simple momentum indicator like a moving average crossover, you see how the green line and the blue line cross bearishly here? Well, you're getting the flip side of that now, right? So the Dixie here is back on an upswing, and there's no real signs of stopping it. So I'll just kind of keep this one short and sweet. 105, it needs to get below. So the dollar needs to be below 105. HYG needs to be above 75, and SPY needs to be above 393. If you can get all three of these things in order, the market becomes a long. It's a long shot that will happen. But if you can get all three of these things to happen, the market goes back to being a long. In the event that this stays where the dollar is above 105, HYG is below 75, and the question mark becomes what do we do with SPY? It's still a short. If SPY breaks 393, then it's a full-on short. I would look for this to get back down to about 380 with the potential to retest that 375 level. And then we'll have to have another conversation next week. All right, guys, that's my time. I hope this was helpful, nice and sweet. Remember that when we show you this, you can certainly trade the index, or you could trade whatever stock, long or short, as long as it meets the parameters that we covered, because this is just basically a market-wide phenomenon at this point. I don't really think that there's going to be much differentiation between stock X and stock B, or stock A and stock Z. They're all probably going to travel as a group. So if you understand the SPY, bonds, and the dollar, and the interrelationship there, and more importantly, you know your levels that you're looking for, you have a plan for anything that could come your way next week. All right, guys, that's my time. Thanks for being here. Be sure to leave us a like before you go somewhere else on the YouTube. Before you click on the cat video, click on that subscribe button as well. We do appreciate it. It does help us reach more folks on the YouTube, and we certainly appreciate you guys being part of the group. Till next time. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.